Hello again, and welcome to day 2 of our trading series. Yesterday, we answered the question, what is trading? Today we go one step further. Let's talk about what you can actually trade in the financial markets. Whether you're looking for stability, volatility, or just something exciting to learn, there's something for everyone. Let's dive in. Commodities. These are physical goods like gold, crude oil, natural gas, and even agricultural products like coffee or wheat. But for traders, we don't buy physical barrels of oil or gold bars. Instead, we trade price movements of these assets through platforms that track their global value. Gold, for example, is seen as a safe haven. When markets panic, gold often goes up. Crude oil, on the other hand, reacts heavily to supply and demand news, wars, production cuts, or global slowdowns. Agricultural commodities can be affected by weather conditions, metals, by production, tariffs, and more. Commodities are relatively easy to predict if you follow the news and want big return in short time, considering the risk of mistakes. Commodities are known for their volatility, and that makes them attractive to traders who like sharp moves and short-term opportunities. Currencies, Forex market. This is also called Forex or FX. When you trade Forex, you're trading one currency against another, like dollar rand, euro dollar, or pound yen, and many more. You're essentially predicting whether one currency will rise or fall against another. And because currencies are tied to entire economies, news, inflation, interest rates, and politics, all of that can impact prices. The Forex market is the largest and most liquid in the world, with over $6 trillion traded daily. It's open 24 hours a day, 5 days a week, and often used by traders looking for consistent movement across the globe. Here, the volatility is lower, and traders look for longer-term trends and movements. Indices. We have indices like the Nasdaq, S&P 500, Dow Jones, JSE, and more. Instead of trading one company, you're trading a basket of top-performing companies. For example, the Nasdaq includes 100 giants like Apple, Microsoft, Amazon, Tesla. Indices are a great way to trade the overall economy or market sentiment rather than individual companies. They tend to follow broader trends and are often used by traders during earnings season or economic data releases. Stocks. Of course, we can't ignore stocks. These are shares of individual companies like Apple, Tesla, Meta, or Coca-Cola. When you trade a stock, you're taking a position based on that company's performance, leadership, earnings, product launches, or even news headlines. Stocks can be less predictable than indices, but they offer big movement, especially around earnings reports or major announcements. Some traders specialize in tech stocks, others focus on pharma, energy, or finance. The key is, the more you understand a company, the better your trades can be. Let's summarize the differences between assets. Each type of asset behaves differently, and knowing these differences can help you choose what suits your style. Currencies tend to be less volatile compared to others. They often move slowly, which gives you more time to react. This is great for traders who want to think and analyze rather than act instantly. Commodities, like oil or gold, can be very volatile, reacting sharply to news or geopolitical events. That means you can make money fast, but you can also lose just as quickly if you're not prepared. Indices move with global events. A speech by a central bank, a war, or major financial news can create big swings. They're a good choice for those who follow world news and understand broader economic trends. Stocks are not open 24/5. They follow specific exchange hours, and prices can jump or fall sharply at market open based on overnight news. That means you might wake up to surprises, both good and bad. So before you decide what to trade, ask yourself, do I prefer fast-paced or slower markets? Am I more interested in global news or specific companies? Do I want to trade anytime or during limited hours? Here is a general idea that could help you decide what to do. If you are a risk taker and want to go wild, go for commodities and indices. If you are new and more conservative, go for currencies and some commodities like gold or oil. If you have big capital, go for stocks and indices. With small capital, look for the currencies. Of course, you can combine styles considering all pros and cons. Mini quiz moment. Let's test your understanding. Which of the following is an index? A. Gold. B. USD ZAR. C. Nasdaq. D. Tesla. Nasdaq is an index. Gold is a commodity, USD ZAR currency pair, and Tesla is a stock. What's coming in day 3? In the next video, we'll show you how trades are placed step by step. We'll walk you through platforms, order types, and what it actually looks like to buy or sell an asset. Make sure to subscribe so you don't miss it. Thanks for watching. See you in day 3.